Pawan Goenka, ED and President, Automotive and Farm Equipment Division at Mahindra & Mahindra, joins us right now. Dr. Goenka, hi, morning. Do you see some further uptick coming from the rural markets post the monsoon season in the second half of the fiscal?
The market is looking good in the rural area. I mean, tractor sales are a testimony of that. We have had very good sales in October. November also is going reasonably well. So that's sort of a sign that rural markets are doing well, and our vehicle sales also in the rural markets are going as per our expectation. So I cannot say very specific things that's growing by so much or whatever, but the sentiment is positive, markets are good.
So Mr. Goenka, can you update us on the inventory levels post the festive season? Are they still at comfortable levels, or any production cut should be expected?
We're in absolutely comfortable situation with inventory level. In fact, we're very careful about our manufacturing numbers pre-festive season, because we didn't want to fall in the trap of having over inventory and then doing things that are not good for the business to clear the inventory. So we are very comfortable both in tractor and automotive. There's always 1 or 2 days of inventory that we would want to balance, but nothing that we will be concerned about.
Right, but would you look at production cuts, since you had mentioned you're going to monitor production levels for the next few months?
Right now, we have not planned any production cuts. Of course, in tractor, we are running full steam. But even in automotive, we have not planned any production cuts right now. We had reached a low level of inventory after the festive season. It will somewhat depend on what the November and December demand is. But as of today, I don't have any plans for production cuts.
So are you planning some product launches in the farm equipment segment, especially in the higher horsepower range?
Yes, we do have plans to launch a brand new tractor platform somewhere in the middle of next year. I cannot give more details about what that platform is, but it's a totally new platform. First time after 12 years that we are launching a totally new platform, and we're very excited about it. I think it's going to be a significant enhancement in almost every aspect of the tractor, whether it is looks, whether it is ergonomics, whether it is performance. And I think this will, in some sense, redefine the tractor sort of space in India.
Do you expect the impact of duties, higher fuel costs and competition to continue and pinch profits?
Well, it's difficult to predict what's going to happen in third and fourth quarter. As you know very well that in the first 2 quarters, that is the first half of this financial year, we have managed, in fact, to improve our profitability teeny bit compared to the previous year in the automotive segment, and reasonably good level in the tractor segment. Hard for me to say whether the same will continue in third and fourth quarter. Of course, we will try our level best to do that. We are not doing any major discounts to clear inventory, and therefore should not have a negative impact on profit margin. Also, as I said earlier, that the commodity prices have been behaving very well, though there has been slight uptick in the last 4 weeks or so, but generally behaving very well, and therefore that also does not put pressure on our profitability. But I cannot give you a very specific prediction for third or fourth quarter.
So give us a sense on your electric car business. Your last launch in this segment has been E20, and that really has been disappointing, because even Mr. Mahindra alluded to the fact that the electric car business for Mahindra & Mahindra is not doing well.
Well, yes, we have been somewhat disappointed with the EV sort of demand that we have been able to create with E20 vehicle. We are very happy with the vehicle that has come out. Everybody is very happy with the vehicle that has come out, but it's not selling in the numbers that we were hoping for. Several reasons. I think the most important reason, I won't say only reason, but most important reason is the pricing that we have been able to do because of lack of incentives, and that's adversely affecting the demand. I continue to be hopeful. I think EVs are right for this country. Any apprehensions that one has about the availability of electricity are misplaced, in my opinion. The charging infrastructure will also come as the volumes grow. The primary thing is to get the pricing right, for which we need support from the government, without which we cannot do it. Having said that, we have not by any means lost our enthusiasm for electric vehicles. We are continuing to develop new products. We are currently working on some variants of E2O. We are currently working on a Verito based EV vehicle. We are currently working on Geo and Maximo based EV vehicles for commercial segment. We are currently working on export variant of E2O. So all that work is going on. But how many of these products we launch will depend on what the situation is with subsidies, because without subsidies, it's very difficult. It's going to be very difficult to gain volume in India for E2O, and without that, it's very difficult for us to continue to launch new products in India. But we will continue to develop new products.
So what about your trucks business? What kind of investment is lined up there, and how do you see it performing over the next 2 to 3 quarters?
Well, not much has changed in the truck business in the last few months, though there were some hopes of turnaround, but no turnaround has happened as of now. And most industry players are not expecting a turnaround to happen, at least in the next 2 to 3 quarters. And therefore, the industry will continue to struggle, and any player, including us, will continue to struggle with the industry. We are right now sort of just holding on and waiting for the industry turnaround. And we are investing. We have to continue to invest for future. So we are investing in new products. We are working on variants of our heavy truck. We are working on new LCV. We are working on new ICVs. All that work is going on. But in terms of turnaround of the industry, that has not happened, and therefore our volumes certainly are not picking up.
So tell us how Mahindra & Mahindra will benefit after the merger of Mahindra Engineering Services with Tech Mahindra, with you being a majority owner in MES.
Well, I'm not directly involved with TechM's plans, so I cannot say what TechM will be doing with Mahindra Engineering Services. But the reason for the merger very simply is that it gives a larger scale to engineering work, since currently we had engineering both in TechM as well as in Mahindra Engineering Services. And therefore those two will get combined. I do not know about the new structure that will be put in place. I'm sure TechM will announce that soon. But the primary benefit of this is, rather than being a standalone separate company, now it becomes part of the Tech Mahindra ecosystem, where the engineering work gets combined, as well as the overall IT umbrella is there to help and support develop new customers for Mahindra Engineering Services.